Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB. I'm Nadine Blaney. It is a Monday, so we've made it through the first day of this brand new trading week. It's the 13th of July. So, what happened? That's the big question. On your screen is the CIBO Australia Index, so you can see at about 11 a.m. It was relatively flat, did lose a bit of ground, further ground I should say, heading toward 1 p.m., but picking itself up a little bit toward 4. Now, that is the curtain call for the CIBO Australia Index, but for the S&P ASX 200, still a few trades going through. It is slightly negative, so negative to the tune of about 0.1%. For the quarter to date, it is up by a quarter of 1%, so 0.25%. Look, pretty negative in terms of U.S. futures, pretty negative around the region as well today. So all things considered, I suppose, it could always be worse. And of course, that brings us to some of our key themes. And a lot of the consternation really comes down to what's happening in the Middle East. Of course, we have heard that Iran is striking targets in the Gulf. Its attacks on the Gulf states are in response to U.S. strikes. Iran's still saying that the Strait of Hormuz is closed. So there's a lot of stress around the reopening of that strait because, of course, soaring oil prices, which we did see in Asia today, translates into inflation. Now, Xero shake, hard to say it fast 4 times. It comes down to its CEO, Sukhinder Cassidy, selling some of her stake in Xero, saying that it was for personal tax obligations, but you know what that usually does to a share price. And Regis retreats. So Regis is out of the running for Vault. It looks as if Genesis Minerals will emerge victorious. So a bit of M&A on this Monday. Let's check in with these different sectors to see how they fared. And tech was, I think, the worst performing sector overall. WiseTech down by 1 and pretty much 0.75%. You can see Xero down by 4%, Life 360, NextDC was actually covered on the call today. If you're interested in having listened to that episode, we had a bit of a technical v fundamentals, although I've got to say there was quite a lot of agreement between my two guests. So yeah, Infotech was the worst performing sector. Utilities didn't do very well either. And then we have discretionary. So perhaps a bit surprising, we saw some strength in the consumer discretionary space. I guess the exception to that rule was Lovisa. And you know, it's not on this board, but in the very small end of town, City Chic Collective. So it's an online plus size retailer. I mean, it does have some stores, but the vast majority of its sales are online. It actually soared more than 20% at one point today because it seems to be doing a bit better, of course, after a very troubled time. So there's another look at some of those other consumer discretionary names, including Temple and Webster, which is down by close to 5%. Let's get to the news, shall we? And Regis Resources will not counter Genesis Minerals' $5.6 billion bid for Vault, paving the way for Vault to terminate its existing agreement and back the Genesis takeover. At Xero, as I said, Sukhinder Singh Cassidy sold $2.2 million worth of shares last week to meet personal tax obligations. There's City Chic Collective, stronger sales, nearly doubling its earnings for FY26, up by 30%, but to 7 cents per share. And Ampol secured a $400 million delayed draw subordinated loan facility backed by KKR's private credit and insurance platforms. And Omedia says that it remains in takeover discussions with 3 private equity firms, including PEP, Squared Capital, and Oaktree, with the highest non-binding offer valuing the company at $1.65 per share. That was also featured on today's episode of The Call with David Novak and Zacharias. All right, let's get a view on what's been happening out there. And for that, Kai Chen from MPC Markets joins me now. So it looks like it'll be a relatively flat finish here. All things considered, not that bad.
Yeah, no, exactly. And, you know, we are seeing a resurfacing of the tension in the Middle East, and it's a little bit contradictory in terms of the statements that's been provided. Iran says the strait is closed, and the US is saying that, the flow continues. But I think the key thing is oil Crude oil, we saw crude oil jump today, and it's come off quite a bit from the highs, and I think it does represent a good opportunity at the moment. But the market overall, today it has been fairly mild in terms of what the correction is. Most of the fall has been in the tech sector, as you mentioned. It's the damage is pretty contained.
Yet, why do you reckon the tech sector is doing so poorly? And I know that our tech sector is not comparable to what we have in the States, but I mean, you would have thought that maybe some tech companies would do a bit better, considering that's still what the driver is primarily of the bull run in the States.
Yeah, no, absolutely. I think the technology stocks that we have in Australia are not really the ones seeing a lot of flows come through. Most of it has been infrastructure related. In the US, we've seen Micron, Lam Research, all those hyperscaling chip and semiconductor manufacturers. They've seen the most of the flows. As well as a bit of cybersecurity, but the tech stocks that we're talking about here in Australia, Xero and WiseTech, which has its own problems, they haven't really seen the flows of it.
No. All right. Look, energy obviously doing well because of the escalating tensions, particularly with Iran launching some strikes in the Gulf states, but also saying that the Strait of Hormuz is closed. So if you reckon that, energy is a good opportunity, in what way? So you expect the price to keep rising?
Yeah, I think fundamentally the constraint is still there where there's tension, and there is still a potential that it could escalate. I'm not saying it would, but there's a potential there. But I think from a pricing standpoint, but even before the conflict started, oil was trading around 65 or somewhere around there. It's not that much of a premium considering what risk is on the table. So, having fallen back from the above $100 a barrel back down to the high 60s, it was a really good opportunity given that the risk was still on the table.
Yeah, Brent up by 4.5%, light crude today up by 4.6. That's putting on a further 5% pretty much in this Asian session. When it comes to some other key themes out there, gold, obviously, when you see oil up, you often see gold down. The gold miners seem to get particularly hard hit, even though we've got this M&A sort of vibe going on in the sector. I was speaking with a guest earlier today who said, this Vault Genesis, or the Genesis takeover of Vault, could just be the start of some consolidation in that space. Do you agree?
Yeah, no, absolutely. And, going back into the price of gold, it is seeing a bit of consolidation in this area. So, obviously last year it's had a spectacular run in the precious metals, but I think this year it's really about consolidation, and the risk is really inflation. So, given if there is a potential of higher inflation or sustained inflation, it really puts pressure on the central banks here in Australia as well as in the US to either hike rates or keep rates high. And that's not good for precious metals. So that's really what's been reflected in the market. Having said that, we are seeing a bit of support around that 4,000 level for gold and silver. So, it's definitely working its way through the market. And, given the strong performance over the last couple of years, it's consolidating. In terms of the gold stocks, it's really interesting because given where the price of gold is, most of these gold miners are having stellar profits because the cost hasn't increased as much as the price has over the last couple of years. But yeah, it is definitely a chance where the bigger players might consolidate some of these quality assets in the mining, smaller gold and silver miners. So yeah, it'll be interesting to see how the M&A plays out.
All right, Kai, one feature of Friday in the States was the listing of SK Hynix ADRs, and it was a blockbuster result. But today we've seen the shares in SK Hynix sinking like a stone in South Korea. Why is that?
Yeah, it's very interesting. So with DRs, depository receipts and cross listings, it's very interesting because what would probably have happened is basically people would have bought some of the US shares and then, or they would have transferred their holdings across, right? So now there's an easier listing in the US. It's only natural because on Friday we saw it go up by, I think, 13%. Today it's sold off by 11%. So I think it's just reweighting of the holdings and positions as opposed to anything else. So yeah, it's pretty natural to see that.
Okay. Now, elsewhere, what are you thinking about key themes for the week? We've got a number of Fed speakers tonight. We've got a BOE speaker, ECB speaker, because so much focus is now going to have, I mean, it's always been about inflation, but we had heard about, transient inflation being brought on by oil. But if this conflict in the Middle East continues and the strait remains at least hindered, I mean, you just can't see how we escape further inflationary pressures.
Yeah, no, absolutely. And going back to my thoughts on the energy sector, I just think in terms of pricing, it's very, very cheap for what is on the table. Of course, if the conflict continues and there's sustained, tensions in the Middle East, that just adds to the case again. So, for a risk to reward play, I really do think a lot of the energy sector stocks are really underpriced at the moment, and that's really where the opportunity is.
All right. So what else do we look for? I mean, where are you guys looking for opportunities right now? I had a really interesting conversation with a gentleman from Allen Gray earlier this morning, and they're contrarian investors, and he's actually looking in office. We had a great conversation about Dexus, if anybody wants to go online and take a listen to it. I mean, where are you finding your sort of contrarian ideas?
Yeah, I mean, probably not REITs. I think healthcare has been another sector that's been really undervalued over the last year and a half. And it is traditionally a defensive sector. So, for us, really for the growth side, the main thematic is AI and, the hyperscalers and the chip stocks and etc. But I think really where undervaluation is persistent is in the healthcare sector, and we are seeing some green shoots. And there's plenty of opportunities in Australia to buy absolutely discounted stocks like CSL, ResMed or Cochlear. I know obviously there are some fundamental challenges that these companies have to work through, but given where the price is at the moment, they do represent a good opportunity. So that's kind of where we're looking at, cross sector. And yeah, I think that, in terms of tech stocks, probably not in Australia. The US obviously presents a greater selection in stocks that will potentially outperform in the near future as well.
All right. Well, Kai Chen from MPC Markets, thank you so much for joining us today.
Pleasure.
Just in keeping with the energy theme, the oil theme, our stock of the day was Karoon Energy. We spoke with David Novak from Wealthwise Education and Zach Riaz from Banyan Tree Investments.
Always cautious about stocks that are, sort of hitting their straps with key assets. Now with Karoon, this particular asset is, I think it's only, we don't cover the stock closely. It's the only sole producing asset, and it's in Brazil. And obviously the announcement around the export tax just shows you that there is, when you're not operating in, very developed jurisdictions like US and Australia.
I'm actually rating this as a buy. At the end of June, 29th of June, the chairman, Peter Botten, came out and said that they're extending their buyback with another 75 million US. They already bought 94 million shares. And his comments were the board believes that Karoon shares are significantly undervalued, which is why they're doing the share buyback, of course, creating an attractive opportunity to buy back and cancel shares and enhance the value for remaining shareholders.
All right, so let's get to some of the leaders and laggards, taking a look at Mesoblast. So it had a pretty positive broker note out this morning. And yes, shares have just been going gangbusters, up by about 6% today. So it's been moved to a buy from speculative buy by Bell Potter, and they lifted the target price significantly. Sigma Health, I'm not seeing any news, but we do have sort of a defensive stance in in the market today, up by 4% to $2.92. Ampol is up by 4.3%. So it has had that transaction we talked about, that $400 million delayed draw subordinated notes facility provided, Genesis Minerals on that Vault takeover, and Centuria Capital as well. Some of the laggards, and this is percentage terms, of course. Kingsgate Consolidated was out with a production update. Not a great day to disappoint the market, down by 12.5%. Silex Systems, we had some good news in the uranium space on Friday, but we're seeing a bit of give back here. Develop Global, Austal, and yeah, ResMed has been in the doldrums all day today. I can't see any news associated with it, but it's really interesting because even when there's been other healthcare companies making good gains, ResMed has just been lagging. All right, in the small to mid-cap space, got Island Pharma up by close to 10% to 50 cents per share. And on the other side of the equation, we've got Kaiser Reef down by close to 9% to 18 cents per share. Tonight, we've got an OPEC meeting happening, along with inflation coming from India. We've also got a bit of central bank speak happening. The FOMC member Bowman will be speaking, along with the Fed's Waller, BOE's Pill, and the ECB Schnabel all speak. Tomorrow here, we get the Westpac Consumer Confidence Survey, the NAB Business Confidence Survey for the month of June. We get a U.S. federal budget balance and industrial production coming from Japan. So here we go. Drum roll, please. The final closing price for the S&P ASX 200 is 8,808.5, which is a very, very minuscule gain. Just seeing some green on the screen to close out this Monday session. Nice to see. As we head toward that U.S. Open, we've got futures looking pretty negative for the NASDAQ, off by 1.3%. Doesn't mean it will necessarily be a negative session. It does give you a little bit of a pulse check. And just watching mainland Chinese markets down by 3.5%. Also some selling in Japan at this stage. But look, we did a lot of wonderful content today, lots of great interviews. If you'd like to have a listen overnight, if you've missed anything, we'd love it if you did. And otherwise, we look forward to seeing you tomorrow. Have a good night.